Hi there, I'm Mark Walker. We're here with the Fintech Power 50. It's at Fintech Connect. I'm here with the amazing David Parker. How are you doing today, David?
Very well, thank you.
So we were thinking about what would be an interesting subject to have a little chat about. And we were talking about challenger banks. And we're talking about incumbents releasing challenger banks. Now I know you're a very shy, retiring man, so you don't normally have much of an opinion on things, but could you bring us an opinion on this?
I think it's going to be interesting. So let's be honest here. There is the industry perspective. In other words, what we in payments and financial services think about an RBS, challenger bank, neobank, whatever you want to call it. And then there's what does the man in the street think? And I think they're very different things. I mean, it's interesting. If you look at the metal card that's just launched, the metal product, it's been very much branded as metal from NatWest, isn't it?
It has, yeah, very much so, yeah.
So, you know, there's no hiding who it's from. Even the man on the street, it's very clear, and, you know, they're going to say, well, why is this better than what I'm getting from NatWest before? And, you know, on the other hand, if you look at Bo, it doesn't say Bo from RBS, does it? It just says Bo. So Bo's going to be going up against, you know, every other neobank, and by the way, they seem to be popping up. Bank challengers or challenger banks, and we can talk about that in a minute, seem to be popping up every other day at the moment.
They do indeed.
They literally, I mean, whoever's tracking them must have a job for life because they're popping up so fast, I can't even keep track of them.
Well, the interesting thing is because of the rise of the banking as a service, or the SaaS, the BaaS, what you can create a bank within about 6 to 7 weeks, almost, you know. We were recently in Singapore at the Singapore Fintech Festival, and we were talking to Nigel Verron from Rails Bank, and he was saying they managed to get one of their debit card systems up and running within 4 weeks.
And I'll push back on that because Rails Bank is not a bank, it's a bank challenger. So they managed to get a bank challenger live, not a challenger bank live.
Absolutely, yes, an interesting differentiation. The thing, as you said earlier, is that, you know, us in the industry, we know a little bit about the mechanics underneath the hood of some of these cars, and I kind of relate banks to cars and challengers to cars.
Yeah, but I think there's a real issue here, and the real issue is this. It reminds me of some of the early days of e-money and prepaid and all this. That, you know, I had a major media group call me up, mainstream, and they said, we want to do a session on prepaid cards next week, and we're looking for experts and everything else. So I said to them, okay, do you consider Go Henry a prepaid card? And she said, well, I do. My daughter just calls it her account. So I said, so what is it? And I took her through a few more, you know, of sort of monies, and a few more of the ones that, you know, maybe you don't necessarily think about being prepaid. And she said, oh, it's actually not that simple, is it? It's quite complex out there about how we perceive things versus how they're actually technically structured. And my issue is that there are people out there who are in the industry not defining things properly. Now, why is that important? Because the mainstream press, we cannot expect a journalist from the Times, the Telegraph, to really understand the nuances of what we're talking about. So what do? They go to the trade press, don't you, to understand. And if they see people in the trade press describing it one way, they will immediately assume that's the way they should describe it. So actually, when we in the trade, in the business, describe things wrongly and go, oh, well, it doesn't matter, it does matter, because the mainstream journalists pick up on that and then broadcast it to the consumer. And there are fundamental differences between how a bank works and how an e-money institution works. And they're fundamental in terms of how funds are held, the protections they have, the products they offer, and the cost structures behind them. And therefore, I get very annoyed when people in the industry go, oh, it doesn't matter. It does matter, because if we don't get it right, how can we expect the mainstream media to get it right? And if the mainstream media don't get it right, how can we expect consumers, the end users, to actually understand the difference? We can't.
That's true. We're kind of adding to the propagation of misinformation.
Misinformation, exactly.
Yeah.
And therefore that causes problems longer term when there are problems. So then you have, let's say, a problem with someone going bust, and people say, oh, claim back on your card provider. Well, actually, no, it's not a credit card. It's not covered by Section 75.
Yeah. Well, it's interestingly, now there's a lot going on with business banking at the moment as well.
Yeah.
And I was having a conversation recently looking with a company looking to move from a challenger bank that they had their business account with at the moment to an incumbent. And the incumbent was saying, well, you've got the automatic switch option where you can actually get all your direct debits.
Doesn't apply.
Like, oh, no. Oh, it's a challenger bank. Oh, sorry, no. That doesn't apply to them sort of situations.
No, it was a bank challenger, not a challenger bank.
Okay, a bank challenger.
And you've done exactly the same thing. You've called it a challenger bank. I can almost guarantee you it was with a bank challenger. In other words, they were operating on an e-money basis. They are not a bank, and therefore it's very hard to have a bank switching service. Guess the word there.
Yep.
Bank switching. Guess what the first word there is? Bank. If you're not a bank.
Okay, I understand that. Yeah.
So bank switching service applies to banks. If you're a challenger bank, it works. If you're a bank challenger.
So who started the misinformation? Was it the let's get the terminology right this time, was it the bank challengers that decided to call themselves challenger banks?
Some of those deliberately, yes, because their investors like to be seen as having a bank, if you see what I mean, good for valuations. Some of it is PR departments. I shall name none, but type in, challenger bank does X, and I guarantee you there's quite a few bank challengers who pop up with the PR departments like to write the press releases. There was a recent one where a bank challenger announced in a press release they were holding a very large amount of consumer funds. As a bank challenger, they don't hold consumer funds. It's held by a deposit-taking institution, a bank.
Yeah. And that's what my analogy of a car, when you open up the hood and what you think is a bank inside is actually an incumbent inside.
Correct.
Yeah.
And so going back to where we started off, what do we think of all these new challenger banks being launched? One of the challenges, or not the challenge their own, one of the issues maybe in the marketplace is that we've got these new banks being formed by incumbents. Some of them are being co-branded with the incumbent's name, some of them are not. What's a consumer going to pick up on?
One would imagine they're going to pick up on the incumbent bank's name behind it.
Maybe,
and think,
but Bo is not. But Bo is not. So Bo is going head to head with N26. Bo N26. And it's interesting, in America, what I'm hearing is N26 has not been that successful because its USPs it had in Europe don't really apply over there. And so do you know what? It's the same as some of the other challenger banks that are already out there.
Yeah.
So, it's just going to America or going to Australia or whatever. These challenger banks are popping up globally, as we know. But my concern is not enough of them have real USPs to sustain them. Just saying we've got a great app in the nicest possible way, $50,000, $100,000, I can create you a good app. What's beyond that? What makes you different? I mean, if you think about it, I used to do 5-10 years ago, I used to walk into a room on a conference like this and say, hands up anyone here who loves their bank. 10% of the room would put their hands up.
Nowadays...
No, hang on. 90% of those customers would be with one bank.
Okay. Right.
Any ideas?
Are you going to name the bank? Oh.
First Direct.
Okay.
Because First Direct was so customer focus orientated. For everyone else, they didn't love it because they had a transactional relationship.
Yeah.
Now, if you think about someone like Virgin, the brand itself, and Virgin Money, Virgin is a brand you have an emotional relationship to as much as a transactional one. And if you look at these new challenger banks, most of them are coming up with emotional-led propositions to try and get you to have an emotional-led brand relationship to that institution rather than the transactional institution. But most of them are giving away everything for free.
Yeah.
What happens when they start charging? Is the emotional tie of that relationship going to be strong enough to keep you there, or are those customers just going to switch because they view it as a transactional relationship?
So we have a bit of a case in point there, don't we, with Monzo, releasing Monzo Plus, which was where they started trying to charge for added services. And that didn't go so well, quite famously in the press.
And they pulled it, whereas you've got someone like Curve, who has actually successfully got out there. So's Revolut, in fairness to them, with some of their premium stuff, and both of those are selling a good number. And it's a good percentage these days of current accounts in the UK are premium based. I don't know if you saw in the weekend that TSB, some leaked papers saying that they're basically going to pull back from basic current accounts and much more go to lending and premium accounts because they can't make money on current accounts. You know, guess what? Every time you use a debit card, it costs the issuer money.
Yeah, absolutely, and there's always been a loss leader section of the banking business for the incumbents.
So when we talk about these new challenger banks and where everything is going, I think the real issue is how many of these are going to have relationships that can actually last, how many of these are going to have relationships that go beyond when they actually start charging for services, and how many of them are going to get critical mass to actually be large enough to actually survive.
Yeah, well, it's interesting when you start thinking about some of the numbers that some of the bank challengers are putting out.
Bank challengers or challenger banks?
Well, I was going for both. I just wanted to make sure you were paying attention. You know, some of the numbers: 9 million accounts, 6 million accounts worldwide. Barclays has 26 million current accounts just in the UK.
But it's also how many of them are active. You see, one of the ways I like to look at it is, and maybe it's wrong, but I do think salary loads are a great indicator. There are challenger banks out there that are really happy with 25, 30% salary loads. There are bank challengers out there who are getting 75% plus on salary loads. I know which business I'd rather invest in.
Yeah, very true.
It's interesting, Monzo on stage actually at a previous event turned around and said, if we knew what we knew now, we wouldn't have become a bank. Would have stayed as an e-money issuer.
I remember that story, yeah.
And you know, it's telling that, you know, someone like APS is becoming a bank for very good reasons. They lend money to businesses. Okay? They've got a big amount of money, of consumer money sitting there they can't touch. Once they become a bank, they can use that for lending and reduce their cost of finance. Business case, you know, open and shut basically. But if you think about it, the reason you generally become a bank is to do lending.
Well, that was an original incumbent.
Because you make money.
Yes, absolutely.
But a lot of the challengers aren't doing any lending.
Well, no, the original banking model was bring deposits in, hold on to money, use that money then to lend to other people and make money off of that lending and balance it round that way.
So my simple question is, if you're not doing lending and you're not charging premium accounts, how are you making money?
Well, that's probably a very good question for a lot of them at the moment, and they're probably working through that at the moment.
I'm not even seeing a roadmap to it. Take someone like Starling, they are doing lending, they're doing their APIs, they're doing cost-effective access. You know, it's a very different business model. It's a bank model. It's a modern bank model, but it's a very different model than some of the others out there who, you know, could be either using a BaaS provider or not.
It's kind of interesting. That's probably like as a final thought is, effectively, these bank challengers came into the market to disrupt banks. And isn't it curious that over the years, the last 2 years or so, a lot of those initial challengers are now moving into replicate the banking model, but in a digital way.
But not always for good reason. You know, Cash Plus, you know, there's a solid reason there. I would argue some of the others have become banks and not realised either what they're getting into, and like Monzo said, and B, don't really understand the costs of being regulated as a bank are much higher than e-money, but also how are they going to use this increased flexibility? And I'm not sure they're really grasping it and therefore are going to be able to generate the income and profits needed.
It's going to be an interesting next year, I think, as we go into things.
I think next year will be interesting. I mean, if you're looking for forecasts, we've got to see a consolidation somewhere. We've already seen things like Loot go under, that was a bank challenger, you could say, for the student market. How many more are finally going to run out of money? We are getting a dot-com bubble. At some point, VCs are going to say we want profits, not just customer numbers. We want active customers who are going to generate profits.
I think it's going to be a very, very interesting year next year.
I look forward to coming back in a year's time then, as we look back on this same conversation about challenger banks and bank challengers.
Sounds good. Thank you very much, David. Cheers.